Hello everyone, Clifford Bennett, Chief Economist, ACY Securities, a student of the markets and everything the world throws up at us. Okay, so we saw a spectacular reversal in US stocks, very encouraging indeed for the bulls on the day. It was as if the previous day's meltdown had never happened and none of the reasons that caused that meltdown no longer existed, basically. They evaporated and it was just back to the old game of keep buying. Now, one of the things, here's a little bit of a lesson 1.12 because we don't do 1.01 on this show. 1.12, 1.13, just remember markets are responding to order flow, not to economics or common sense. So whether we're getting it right or wrong, we must always be mindful that it is the orders hitting the market as well as the news and other factors. So on the day, massive buy order at the start of New York, as there has been on a consistent basis for quite some time. There's no doubt, and I've written about this before, there have been some very large funds loading back into the market. And we can see that, and we saw that an example of that in the euro where the price action totally gave it away, that someone like a very large sovereign fund, perhaps even China, was moving a lot of funds into the euro, and you could see that in the price action by how it behaved on a kind of 4-hourly basis. Often they leave their orders in time chunks to gradually work through a massive amount of money over perhaps 2 weeks. So that sort of thing was happening in the euro, and it also looked like a similar thing was happening in US stocks, but probably different counterparties. In the end here though, we're left with very bullish price action on the day for equities in general. And that is also flowing into gold and oil prices. So I continue to like those markets higher. The only caveat with those markets is should the US dollar stabilize here and begin to move higher. My bearish yen call is working out okay. Looking for a base in the US dollar has been a cautionary suggestion, but I continue to do that. US Federal Reserve, by the time I speak to you tomorrow, the US Federal Reserve will have already hiked interest rates. The entire market expects 25 points. I seem to be the only one saying it could well be still 50 points. So we'll see. If it is the 25 points that everyone expects, I think you will get a positive response from markets, and it could even go on for several days. There certainly does seem an entire sentiment shift here that it doesn't matter if the US economy is going into recession, it won't last. Big assumption. It doesn't matter that the Federal Reserve's continuing to hike interest rates, it's doing so less aggressively. That's a debatable point as well, but that's how the market wants to see it at the moment, so that's what we're getting. I suggest a little bit of caution with positioning on the day. You could get a big up move on the announcement, then a big collapse, then a big recovery, a bit of a fallback, and then towards the end of the New York trading day, after several whips perhaps, we'll see what's going on. It could be either trending higher or trending lower. It's a very much anything can happen day, and I don't usually like saying that because I always like to have a strong view. My idea is to see how far it can rally, and then when the rally looks tired, to fade that rally. That's my personal view on things. On the economic front, we saw US property prices continue to fall rapidly. In fact, US property prices have already fallen the equivalent of about 1/3 the distance they fell in the GFC. So it's no small shift that is occurring there, and something to keep an eye on. Remember, 18 months ago, I did forecast the second great housing bubble of the United States this century was in its formation stages and would soon burst around the end of last year, and that is what we have been seeing. So, looking for really a still weakening US economy regardless of what the Federal Reserve does, and I think that will be the major characteristic in the long run to determine the outlook for equity markets. But on the day, it's going to be an exciting one. I wish you well. May the markets be fair, even kind to you. Clifford Bennett, Chief Economist, ACY Securities.